Hello and welcome. My name is Noble. I'm here with another update on the overall market. So let's quickly discuss what happened today and what can we expect in coming sessions. You're looking at the daily chart of QQQ. As you can see, QQQ has been pulling back since reaching a high of around 335 in mid-August. It fell almost 12%. And today it traded as low as around 293 before finding support in this level. Now this level happens to be the 61.8% retracement of this move right here. So that's an important level. There's also horizontal support at this level right here. You can see a number of candles are intersecting at this level. So this level was important, and at least today it managed to find support. It was weak in the first half of the day, but started to recover in the second half and actually finished unchanged. Part of the recovery may be people didn't want to take any short position going into tomorrow, because tomorrow the Labor Department is going to release unemployment rate for the month of August. So anyone who was short didn't want to hold a short position, because if the report turns out to be market friendly, then we could see a decent rebound tomorrow. So let's quickly look at the what is the market expecting. So what the market is expecting is an increase in new jobs created of about 300,000. Last month, new jobs added were about 528,000, which was well above the expectation of 250,000 new jobs. So in the month of August, market is expecting economy to have added 300,000 new jobs. The other one that would be important to look at is the rate at which the wages are going up. So the expectation is that the wages would go up by 5.3%. Last month it went up at a rate of 5.2%. If the number comes in, if the new jobs created comes in below this level, 300, market might view it positively. Say anything like 250, 200 would be viewed as positive by the market. But on the other hand, if we see a figure which is above this number, 300,000, market may be disappointed, and we could have further selling. So coming back to QQQ, at least for now, it held this level around 294 at the moment, which is where the 61.8 fib is sitting, as well as the horizontal support. Now, if the report happens to be strong and the reaction is negative, obviously we could expect to see further pullback. And beyond this, really, the next key level is the previous low. But if the report is friendly to the market, then we could see a bounce here. The question is, how far can we go? Well, let me just bring in the moving averages. So you can see that these are the two moving averages. The green one is the 50-day moving average. The yellow one is the 20 EMA. So these are currently sitting around 310, 311. So that would be the first area of resistance. As you can see, it has fallen below those two moving averages. So they would act as dynamic resistance at the moment. You can see right here, after it fell below the moving averages, when it tried to bounce, those moving averages acted as resistance right here, right here, right here. So these would be the first area of resistance. If it's able to get through this level, then this area would be the next area of resistance, which is around 320, and that's where Fed Chairman Powell spoke, and the market started this leg of the selling. It was already falling. It had fallen. This is the first leg of the fall, and there was a modest rebound, and this is the second leg. So overcoming this high of this leg would be important. So let's see what the reaction is tomorrow. Positive reaction, these would be the resistance level. Support is here. and below there really there's not much. If the report is strong, I think everyone would be basically expecting market to go back and retest the low from mid-June. So that's QQQ. If we quickly look at SPY, SPY also has been pulling back. Today it found support again at the 618 fib, and there's also horizontal support at this level, so around 380, 388, 389 level. So it tested that level, bounced off that level, and closed higher today. So that's positive. So again, tomorrow the reaction from the employment report will dictate what happens. The resistance would be at the 20 and 50 EMAs right here, which are around 406 to 409 area, and beyond that additional resistance would be right over here, which was the previous swing high, which is around 419. So support, if it breaks below the 388, I think we may be looking at the previous low. So that's why tomorrow's report is quite important. If we look at the momentum indicators, they are all trending lower. MACD is trending lower. It hasn't crossed the zero line yet, but crossing below the zero line would be negative. RSI is oversold area, so it's now trying to form a base at this purple line, which is 38.2 level. Stochastic is oversold, so there is room for a bounce given the fact that market has fallen a lot, and many of the indicators are in oversold territory. So we'll see what happens tomorrow, but given the fact that they're in oversold territory, possibility of a bounce is good. If we look at dollar now, dollar continues to be very, very strong. It moved to a new high today. It was up almost 1%. It consolidated for a few days and then moved to a new high. The momentum indicators are strong. MACD is going higher, RSI is moving higher. So there is no signs of a reversal yet. Moving averages are moving higher. So we'll see what happens tomorrow. If the job number is friendly to equities, then we could see a pullback into US dollar. But DXY is not showing any signs of a reversal. It looks bullish. If we look at the rates market, 2-year continues to move higher. It was up one tick. It's now at a new high. It has taken out this previous high. So they're continuing to move higher. And this is because one of the Fed officials said that she expects Fed funds rate to be around 4%. So market is now beginning to price that in. So that's why we're seeing the rates yields continue to move higher. The 10-year yield is at 325. It continues to move higher. Again, on the backs of comments from Fed officials that 3.5% may not be the end. It may be more closer to 4%. So yields continue to move higher. Oil is not looking good at the moment. It failed to take out the 50-day moving average right here. There has been some negative reports that COVID cases continue to rise in China, and because of the lockdown, the demand for oil hasn't been as robust in China. There is also reports that there could be additional supply coming in from Venezuela, from Iran. So all of these is putting downward pressure on oil. So it has backed off from the 200-day and 50-day moving average. It's now heading towards this level, 84 and a half. You can see this was a previous area of resistance. So that would be the near-term support level. Momentum indicators are quite weak. MACD wasn't able to get back above the zero line. Looks like it's crossing. Stochastic is moving lower. RSI has, which was moving higher, has pulled back. So this is not looking good at the moment, but let's see whether or not this support is held around 84.50. Moving on to VIX. So this is VIX. So I just remove the moving averages so we can see this better, the price action. So I've talked about this level 25.50 zone. So this is the zone that it has tested few times this week and wasn't able to get through. I think all eyes are going to be tomorrow in the jobs report, depending upon what happens to the report. If the report is stronger than what the market is expecting, then I think we can see a spike in VIX and could very well move through this level. But if the report is market friendly, then we can see a continuation of pullback. So near-term support is around this level, around 24. And if that level is breached, then we may be looking at, maybe all the way back, going back to this low around 20. MACD is attempting to close above the zero line, so we'll see how that plays out. RSI is experiencing some resistance at the 61.8 level, and stochastic is overbought. So there is room for pullback in VIX, but again, tomorrow's report will indicate whether it breaks to the upside or to the downside. If we look at some of the sectors in terms of what happened today, the standout obviously was the healthcare. So XLV, which has been pulling back with the rest of the market, bounced back from oversold condition, managed to recover, reclaim the support line. There is additional room to move higher, but this was one of the strongest sector within S&P 500. This is one of the defensive sector. The other defensive sector, XLU, also made a good bounce. It also has been pulling back. Investors seem to be moving back into some of the defensive sector. On the growth sector, XLY also managed to recover, had a good day. It was up almost 1%. All of these indicators are, all these averages are oversold, so there is room for a bounce. If we look at other sectors, semiconductor, very weak, but managed to recover today from the earlier losses. But overall technical picture remains weak. Momentum indicators are moving lower. So again, depends on what happens to the overall market tomorrow from the jobs report. If the reaction is positive, then we could see a bounce because it is oversold, so possibility of a bounce exists. Resistance would be around here, around 390, and then to this previous swing high around 410. Biotechnology sector did well today, XBI. So XBI, which again has been pulling back, managed to get back above this zone right here. So it's doing better than the overall market. MACD hasn't crossed below the zero line. If it can make a U-turn here and then make a cross here, that would be positive. Stochastic is in oversold, so there is possibility of further rebound in here. So this is looking not as bad. If we look at the solar sector, so this sector broke below this uptrend line and still below this. So until it gets back above this line, so the momentum would be to the downside, but it is oversold. So there is room for a bounce. So if the overall market goes up tomorrow, then we could see it get back above this line. But if there is selling pressure tomorrow from the jobs report, again, we could see further weakness, and this level 78.50 would be, there's a gap here. We could see the gap being closed So there would be support between 77.50 and 78 area. So that's all for today. Thank you very much for watching the video. I'll come back with another update after tomorrow's jobs report. Thank you very much.